Hey guys, welcome back to the channel. Today is Monday, August 9, 2021, and the market is just about to close. I want to go ahead and go over my trades from today because I think there's some good lessons for myself and hopefully you guys can learn from my mistakes because it just goes to show, I mean, no matter where you are in your journey, we are still going to make mistakes from time to time. Ideally, we make those mistakes less often with the more experience that we get, but I still make mistakes, and today is going to be proof of that. So we're going to take a look at some trades that I executed on Tesla very poorly, I might add. We'll actually see my executions on the options chart. And then we'll take a look at a good trade that I caught on Amazon where I was able to redeem myself and finish green on the day. All right, guys, so I appreciate you watching. As always, if you're enjoying the video, make sure you hit the like button, leave me a comment below, and let's go ahead and get started. Okay guys, welcome back. Now first and foremost, let's go over my trades on Tesla because that was going to be my top watch on the day. Now I love Tesla for a couple of reasons here. First of all, we had a nice gap higher. Turned out there was a catalyst on the day, right? The Jefferies gave it a price target upgrade, and I thought that this thing really could have a potential to run. Blowing up this hourly chart, right? So Tesla had this break over that 700 level, and then it's just been consolidating here for a bit. So it's had several days of consolidation. I thought with the price target upgrade today, this would be it. You know, this would be the day that we could get an explosive move higher. Now, the problem is that we're actually opening up underneath the resistance. We had a calc level at 711.46 right there. And really for kind of a gap and go situation where you'd look to buy the open for an explosive move higher, you need to be opening right over that support, and we weren't. We were opening underneath of it. So the ideal setup for me was to see a quick wash in the morning into that pre-market low. And it's really important here, guys, when you're looking to buy a dip like this, that first move is down, right? If the first move is up, then it's not really a dip buy that I'm going to be really interested in. So the ideal setup was a wash down into the pre-market low to pick up. I was going to buy 5 contracts there and look for the explosive move back up higher, and who knows how high we could have gone. And if the pre-market low didn't hold, realizing, we had some downside risk here in terms of the downside gap, and then we'd probably be looking for, stopping out in a secondary entry closer to 700 or 690. So either way, I like Tesla. It had really good potential. Let's look at it on the 5-minute chart. So here's what I was looking at, right? Here is our opening candle, right? We open and we do get a little bit of a pull, but not very much. And then we start to rip. So I'm thinking to myself, oh man, this is going to do like a 1 or 2 minute opening range break, and it's just going to rip faces off. This could be huge. I want to be in this. I want to be a part of this. And already, what mistake am I making? I'm thinking about the outcome, right? So already making a mistake there. That brought FOMO and, fear of missing out. And so I buy the breakout through the calc level, through all of this resistance. And what does it do? It rolls over and comes right back down, and it comes right into the freaking level where I wanted it. So let's look at the execution chart here. Make sure you guys can see that. All right. So here it is, 710 calls. Here's my entry, getting in at $14 in the premium. Starts to go, and I used an OSO order, which means that I had a $1.50 stop attached to my entry order. So at that point, my stop was in from the second I got into the trade. Starts to go, fails, rolls over, and here's my exit right there. You can see my execution where my stop got hit, right? So I only took 2 contracts because I changed to a breakout trade instead of a dip buy trade. So in terms of management of the trade, once I decided to do the breakout trade, I managed it fine. Like I sized down, good. I had a hard stop in place and I let it take me out, right? Good. But not being patient and waiting for the prime setup, bad, right? If I had just been patient and waited, freaking perfect. I mean, perfect. So just kind of analyzing this, if I'd been patient, absolutely beautiful. This 5-minute candle comes down and it closes right at pre-market low. Okay, this is looking really, really good right here. Why? Because the next 5-minute candle opens, it shows a little bit of weakness right off the open. It actually holds a higher low, crosses back through the open. That is your confirmation. Get the hell in the trade. And I didn't. I totally missed it because of this. If I just avoided this, right? So, looking at what, about a 1150 on the premiums for an entry there, roughly, given spreads and everything, probably around 1150. You'd have to sell your first target would be right here into all of this. You got the calc level, the prior day's open, you have a prior day's low from like 2 days ago, you got pre-market high, a lot of reasons to be taking profit right here. So you're getting in at 1150, you're selling at 14. Nice little jump in the premiums there. Sell half your position. That's what I would have done. And then look to sell everything, or at least everything but one contract on the next push into the prior day's high. Look at this 5-minute candle here. It opened, held the 5-minute 9 EMA, ripped right into the prior day's high, and then rejected and closed here. So even if you didn't sell right at the top and you just sold the close, you still got a nice payday out of that. I mean, you're looking at the close here was 1576 on the premiums. The high was 1684. So I mean, you know what, 1150 to 16. Awesome trade right there in just like 10 minutes. If you just been patient, if I had just been patient. So really, that was the trade of the day. Could have left one piece on with a stop at break even and never would have been stopped out. Came close, but never would have been stopped out of this trade until the end of the day if you didn't want to hold it overnight. So that's really frustrating. So what's the lesson here, right? What's the lesson here? The setup was to wait for the pre-market low, and that's what I should have done. You know, if it was gonna break out and it was gonna, you know, push higher, if it was really that strong on the day, we could have taken a secondary entry on it, and we'll take a look at what I tried to do with the secondary entries now. Let's go ahead and take a look at the second trade that I took on Tesla here. It was on the 7:15 calls. So here we go, right? So I missed this dip buy. We rip up into the prior day's high, and so I'm looking at this like, okay, makes sense that we should pull here. Where can I get involved on this trade, right? Well, you've got a PCH right here. When this candle closed above this candle's high, it left behind a prior candle high. Really good 5-minute setup right there. We pull back into that PCH, and I'm a little bit slow on the trigger, but you can see this is that 5-minute candle. This is whenever I pulled the trigger to get into the trade for a second stab on this. I did not get a good fill, obviously. I missed the PCH fill down here. And I took 2 contracts, again, because I'm kind of getting in with a less ideal setup versus the pre-market low, right? So I took 2 contracts. Unfortunately, I forgot that I still had an OCO order attached to it, and it gave me a second order fill for another 2 contracts. So once I realized that I was sitting up here with 4 contracts, that was double the size that I was originally planning on, because I wanted to give it about a $2 stop on those premiums. I knew that I needed to go ahead and take some size off here because it was really more than I wanted. So I sold one here for a small profit, really, just to remove the risk. And it's a good thing I did, because we did get the pull that I thought we might get, and we got really close to my stop, but we didn't quite trigger it here. This is the pull on Tesla's chart, right? So we got this hard pull here on the 5-minute chart. It came into your initial morning high. It came into the 9 EMA on the 5-minute chart, and it closed right here. The next 5-minute candle opened, showed a little bit of weakness right into the 9 EMA and held. And so I added into the trade right here. You can see I got another fill right there. So now I'm up to 3 contracts. Okay. So we hold, but it's struggling. I'm watching the tape. You see this 5-minute candle here, how it left this long upper wick. And I've talked about this before. When you have these long upper wicks, obviously it's kind of telling you that, you know, sellers, there's a battle going on between the buyers and the sellers were able to drive it down from the high of that candle. You can see it here on the option premiums as well, right? So I was watching the tape. The sellers were just relentless. They just were not having any of it. And you can see, I mean, obviously we didn't get that much higher. So the next 5-minute candle opens, it dips, doesn't quite hit my stop, came very close to stopping me out, and then we start to lift up. But again, you look at this 5-minute candle and it, you know, it looks like it just ripped up, but it didn't just quite do that, right? We were still struggling right here in this area, right off of that initial morning high right there, right? So I ended up taking a contract off there just to remove some risk, and that was probably a mistake on my part. That's getting into that micromanaging aspect. I shouldn't have done that. I should have just left it alone. My stop either gets hit or it doesn't, and look at selling my targets. And my first obvious sell target was high of day. So here it is right here. Here's the push into the high of day, prior day's high as well. This was an obvious place to sell. So I sold one here, and actually sold that for a loss. So that was a mistake. And then this push into the high of day, you can see I sold another one, and now I'm down to one contract, and I set a stop at break even on that last contract. Next candle, we roll over and we trigger my stop. So unfortunately, between this trade and the first trade, again, I'm not looking at my P&L. I don't know exactly what it is, but just kind of doing the math in my head, I'm pretty sure that I'm red overall on Tesla, but I was able to make some back, so that's good. I took a small contrarian scalp trade on NVIDIA, and so with that, I don't know, I probably made like $50 or something on that one. So between those trades and the Amazon trade, which we'll go ahead and look at now, I should be up, I guess doing the math in my head, I should be up a little over $300 or so. Again, you know, I can do the math in my head, but there's just something about seeing the number that makes a difference, right? So really going to give this a try this week. I'm not going to look at my P&L at all week until the weekend, and we'll see how that goes. So here's the trade on Amazon. This one I definitely redeemed myself on. So looking at the hourly chart on this, we had an hourly PCH right here. And this is actually a really huge PCH because you can see it's also the bottom of all of this basing action here, right? So this is kind of a support level for all of that. Anytime you have a PCH on an hourly, it's always a big level to pay attention to. So here is our opening hour today, and we dip right into that PCH. And you've got, again, all of that basing from the sell-off from their last earnings report. So looked really good for a top of the hour setup. We get the top of the hour here. It opens, it dips once again right into that PCH level, and you actually have a calc level there. You've also got a technical analysis, just a support level there from the prior day as well. So a lot of reasons for it to hold that level, right? So how do we get into this particular trade? How do we get an entry into this trade? We'll have to go down to the smaller time frames, right? So go down to the 5-minute chart. And here it is right here, right? So you actually had the prior day's low, you had the calc level, and then you also had that hourly PCH sitting right there. Okay, so I'm looking at it right here as it starts lifting up off that level. I'm starting to look at this. Okay, how we're in the new hour, and I'm looking at this. How can I get involved in this trade? Well, this 5-minute candle closes over the high of the prior candle, so that gave us a nice 5-minute PCH setup right there. Okay, so this candle dips, and let me just adjust this line. There you go. Right, so there's your PCH setup. This candle dips and comes right into the PCH, and that was my entry. Now, I actually used a limit order to get into this trade, and I probably would have been better off if I had just manually executed. So let me show you the option chart here, and make sure you guys can see that. Okay, so here is my entry right here on this candle, right? This was the candle where we dipped into the PCH. Let's pull up Amazon over here. So the PCH is actually there, right? So here it is right here. This is the 5-minute candle right here that dipped into the PCH, and that's that same 5-minute candle right here. Okay, so I actually had a limit. The price is up here. I actually put a limit order down here, and it turns out I probably could have set my limit order a little bit lower, but with the spreads on Amazon, I wasn't exactly sure where a good spot to put it was, so I put it right here at $28.35, and I ended up getting filled probably a little bit too early on that. And I was using about a $2 stop, $2 and change, just a little bit over to account for some slippage. So for Amazon contracts, a $2 risk that's really good. If you can get a $2 risk, just absolutely amazing. And you can see I came very close to getting stopped out on this little pullback right here because my entry was 28.35, and the low of the following candle was 26.28. So it came real close to hitting my stop. Very fortunately, it did not hit my stop. And then you can see, looking at Amazon's chart, right here was the hold of that PCH, and then we ripped. The next 5-minute candle ripped right into the prior day's close. Now, I was very tempted to sell the close of this 5-minute candle, but obviously this looks like it's just getting started, and we have at least one more move higher. You've got a calc level here, you've got pre-market high here, and you've got the initial morning high. So there's a lot of reasons to be taking profit up here. It is actually starting to look like a good short setup entry, but I wanted to see if I could milk just a little bit more out of it, and it's a good thing I did, because if I had sold the close of that candle, I would have been selling here at 32.30. And you can see my exit here on the following candle. I was actually able to get it out at $34.15. So I got what, $5 and change on just one contract right there. That's about a 2.5 hour trade. So really good trade. Obviously turned out to be the right decision to sell because, well, we turned around and came back down and chopped sideways the rest of the day. So I'm extremely happy with that trade. I was able to, you know, gather my thoughts, get my head on straight after just butchering Tesla, and was able to get a really solid trade in that got me green on the day. So like I said, I mean, I'm not looking, but just kind of doing the math, I should be up about $330 or something like that. And if I can make $300 in a day, I'm completely happy with that. Consistently, that's all I can ask for. So with that said, guys, yeah, I guess I'll wrap it up there. If you have any questions or comments, please post those below. Make sure to get to those. I hope you guys were able to get a nice green day as we start the week out. We have the whole week ahead of us, so we'll see what opportunities are out there as we head into the rest of the week. All right, thanks guys for watching. Take care, and we will see you in the next video.